you should really look at the pattern of Bitcoin after a halving.
In just over a decade, Bitcoin has soared from mere cents to tens of thousands of dollars, baffling skeptics and exciting investors. Could it reach $500,000 this year? Let's explore the most shocking predictions that could make 2025 a landmark year for this digital titan. As we navigate through 2025, Bitcoin continues to defy expectations. Charles Hoskinson, a prominent crypto figure, has boldly predicted that Bitcoin's price could soar to between $250,000 and $500,000 within the next 2 years. This optimism stems from a critical blend of factors: Bitcoin's inherent scarcity, heightened institutional interest, and its emerging role as a digital safe haven. Bitcoin's finite supply creates a natural upward pressure on its price, much like gold, but with the modern twist of digital accessibility, Hoskinson remarks. These insights reflect a growing consensus that Bitcoin might not only meet, but could exceed the $500,000 mark, reshaping investment strategies for Americans over 35 looking for stable yet substantial growth. The recent influx of institutional money into Bitcoin ETFs and the endorsement by major financial entities underscore its viability as a long-term investment, rather than just a high-risk venture. Governmental and institutional adoption of Bitcoin is not just expanding, it's reshaping the financial landscape. In 2025, Bitcoin's role as a strategic reserve is being seriously considered by not only pioneering nations like El Salvador, but also several US states. This signals a significant shift in how governments and large institutions perceive Bitcoin's value stability and potential for economic safeguarding. Moreover, major financial entities like Deutsche Bank are not only adopting Bitcoin, but are also venturing into developing Ethereum Layer 2 solutions, broadening the crypto acceptance spectrum. The adoption of Bitcoin by states and institutions isn't just a trend. It's becoming a critical part of financial resilience planning, explains Dr. Sarah Walton, a monetary policy expert. As more entities recognize the benefits of cryptocurrencies, we expect to see a deeper integration into standard financial operations, adds fintech analyst Mark Turner. This evolution suggests a future where Bitcoin and other cryptocurrencies are integral to national and corporate financial strategies, potentially stabilizing economies and offering new growth avenues. The greening of Bitcoin mining in 2025 signifies a transformative shift in the cryptocurrency sector. As miners increasingly adopt renewable energy sources such as solar, wind, and hydroelectric power, they are aligning Bitcoin's operations with global sustainability goals. This shift not only reduces the environmental impact of Bitcoin mining, but also enhances its appeal to investors who prioritize ecological responsibility. Transitioning to sustainable energy sources is not just an environmental decision, it's a strategic economic move that lowers operating costs and broadens the investor base, notes Elena Martinez, a green tech analyst. She highlights how adopting green technologies can lead to substantial savings and attract investments from those committed to environmental sustainability. Furthermore, this shift is vital for Bitcoin's long-term viability, ensuring it remains a premier digital asset in a world increasingly focused on sustainability, adds Dr. Jacob Reynolds, an expert in environmental finance. He points out that sustainable practices are essential to maintaining Bitcoin's position as a leader in the digital currency space as societal values evolve. This strategy doesn't just mitigate the environmental criticisms of Bitcoin, it proactively repositions it as a sustainable financial instrument, thereby increasing its attractiveness and potential for broader adoption in the financial markets. As we progress into 2025, the advancement of blockchain technology is not just about adopting what exists, it's about pioneering the future. Major financial entities are diving deep into blockchain innovations, refining and customizing technologies to fit broader applications beyond typical transactions. This innovation surge coincides with the rise of central bank digital currencies, CBDCs, which are introducing the public to the mechanics of digital currencies while underscoring Bitcoin's value as a decentralized alternative. The introduction of CBDCs is significantly demystifying the concept of digital currencies, paving the way for greater acceptance and integration into everyday finance, notes tech analyst Simon Briggs. This education on digital currencies brings Bitcoin's decentralized nature into the spotlight, offering a contrast to state-controlled digital money. As CBDCs become more common, the public's understanding of digital currencies deepens, reinforcing Bitcoin's position not just as a store of value, but also as a vital player in the future of monetary systems. This blend of technological advancement and the educational impact of CBDCs is not only enhancing Bitcoin's appeal, but also setting the stage for a broader revolution in how we perceive and utilize money in our increasingly digital world. Bitcoin's growing reputation as digital gold is reshaping traditional investment strategies, especially among younger generations. While gold has long been the preferred hedge against inflation, shifting investor sentiment suggests Bitcoin is becoming the preferred store of value. A recent survey found that over 65% of millennial investors now favor Bitcoin over gold, citing accessibility, portability, and higher potential returns as key advantages. Bitcoin is the evolution of gold, scarce, decentralized, and built for the digital economy, says financial analyst Mark Stevens. Unlike gold, Bitcoin is easier to store, transfer, and liquidate, making it a practical alternative for modern investors. Additionally, institutional support for Bitcoin is accelerating this shift. Companies like BlackRock and Fidelity have integrated Bitcoin into investment portfolios, reinforcing its legitimacy. The more institutions back Bitcoin, the more it solidifies itself as the 21st century equivalent of gold, adds crypto strategist Laura Jennings. As economic uncertainty continues, Bitcoin's role as a hedge against inflation is gaining traction. This shift isn't just a trend, it's a fundamental change in how people view wealth preservation, with Bitcoin positioning itself as the leading alternative to traditional safe haven assets. Regulatory clarity is set to play a crucial role in Bitcoin's future in 2025. As governments worldwide establish clear guidelines for cryptocurrency, the market is expected to stabilize, making it more attractive to institutional investors. Recent policy discussions in the US and Europe suggest that a standardized regulatory framework could emerge, reducing uncertainty and increasing Bitcoin's mainstream acceptance. Regulatory clarity is the missing link for mass adoption. Once institutions feel secure, Bitcoin will be fully integrated into global finance, says crypto legal expert Daniel Reeves. Major financial firms, including BlackRock and Fidelity, have already pushed for clear policies, recognizing the long-term potential of digital assets. Beyond institutions, clearer regulations will also benefit individual investors by providing legal safeguards and reducing risks of fraud and market manipulation. When the rules are clear, investors, big and small, can make informed decisions without fearing sudden crackdowns or legal gray areas, notes blockchain analyst Rebecca Clark. As policymakers work to bridge the gap between innovation and regulation, Bitcoin's legitimacy continues to strengthen. With a well-defined legal framework, Bitcoin could move beyond speculation and establish itself as a recognized financial asset worldwide. Before we continue, Hit that like button. It tells us you're ready to explore Bitcoin's wildest predictions for 2025. Let's get back to it. The Lightning Network is transforming Bitcoin from a store of value into a practical, everyday currency. Designed to enable instant, low-cost transactions, this Layer 2 solution is seeing rapid adoption in 2025, making Bitcoin more efficient for daily spending. With improvements in scalability and usability, businesses and financial institutions are increasingly integrating Lightning payments into their operations. The Lightning Network is the key to making Bitcoin a true medium of exchange, not just a long-term investment, says fintech expert Brian Calloway. Faster settlement times and lower fees are helping Bitcoin compete with traditional payment methods, especially in regions with limited banking access. As adoption grows, large corporations and payment providers are exploring ways to integrate Lightning transactions into mainstream financial systems. This is the bridge between Bitcoin and real-world commerce. With seamless payments, businesses can accept Bitcoin as easily as credit cards, notes blockchain researcher Carla Freeman. By improving transaction speed and reducing fees, the Lightning Network is pushing Bitcoin closer to becoming a viable alternative to traditional financial systems. As more companies and consumers adopt this technology, Bitcoin's role as a practical currency, rather than just a store of value, is solidifying. Corporate adoption of Bitcoin is accelerating in 2025, with major companies following the lead of MicroStrategy by adding Bitcoin to their balance sheets. This shift is driven by growing concerns over fiat currency volatility and the increasing recognition of Bitcoin as a reliable store of value. Companies across various sectors, from tech giants to financial institutions, are now integrating Bitcoin into their long-term financial strategies. Corporations are no longer just experimenting with Bitcoin. They're committing to it as a key financial asset, says financial strategist Alan Roberts. This move is not just about speculation, but about hedging against economic uncertainty, similar to how businesses have historically relied on gold and other scarce assets. With businesses like Tesla, Square, and now traditional finance firms allocating Bitcoin to their holdings, this trend signals a fundamental change in corporate treasury management. The more companies hold Bitcoin, the more it normalizes its role in mainstream finance, adds crypto economist Rachel Meyer. As institutional interest strengthens, Bitcoin's position as a corporate asset is becoming undeniable. This widespread adoption by major corporations not only boosts Bitcoin's legitimacy, but also reinforces its value in the financial ecosystem, making it more than just an investment. It's a strategic financial tool. Bitcoin's fixed supply of 21 million coins is becoming a growing concern in 2025 as demand accelerates. With more institutional investors, corporations, and even governments acquiring Bitcoin, the available supply for new buyers is shrinking rapidly. Analysts warn that this scarcity could lead to a supply crisis, further driving up Bitcoin's value and reinforcing its position as a highly sought-after digital asset. Bitcoin's scarcity is not just a feature, it's a fundamental driver of its value. As demand rises, those holding Bitcoin long-term will dictate the market, explains crypto economist Daniel Fisher. With over 19.6 million Bitcoins already mined, the remaining supply is diminishing and long-term holders continue to accumulate. Additionally, many Bitcoins are lost forever, making the real supply even smaller than people realize, notes blockchain researcher Susan Keller. Some estimates suggest that up to 20% of all Bitcoin may be inaccessible due to lost private keys. This growing scarcity is pushing institutions and retail investors to secure their holdings before availability declines further. As Bitcoin's supply crunch intensifies, its role as a store of value becomes more apparent, solidifying its status as a digital asset that could rival traditional investment vehicles. As trust in traditional fiat currencies continues to waver in 2025, Bitcoin is increasingly being viewed as a potential global reserve asset. Economic instability, rising national debts, and inflation concerns have led financial institutions and even some governments to consider Bitcoin as an alternative to traditional reserve assets like gold and the US dollar. Unlike fiat currencies, Bitcoin is decentralized, borderless, and immune to government manipulation, making it an attractive option for long-term financial security. Bitcoin is emerging as a reserve asset because it operates outside of political control, offering stability in an unpredictable economic landscape, says economist Robert Caldwell. With major financial institutions integrating Bitcoin into their long-term strategies, its role in global finance is expanding. Some nations are also exploring Bitcoin as part of their monetary reserves, recognizing its potential as a hedge against economic uncertainty. As central banks experiment with digital currencies, Bitcoin remains the only truly decentralized option, giving it a unique advantage, adds crypto strategist Helena Price. While Bitcoin replacing fiat as the dominant reserve currency is still speculative, its rising adoption by institutions and governments suggests that it is becoming a critical player in the evolution of the global financial system. 2025 is shaping up to be a groundbreaking year for Bitcoin. From reaching new all-time highs to becoming an integral part of global finance, Bitcoin's journey is both exhilarating and unprecedented. As we continue to track these developments, remember to like, subscribe, and hit the bell icon for the latest analyses and updates. Share your thoughts in the comments below and level up your crypto game. Watch, make money with crypto and live trading, and join us next time for more insights into Bitcoin's dynamic trajectory.